Thanks so much for having me here today, Eloise. My name is Fred Hicks. I'm Senior Policy Advisor at IPSE, the Association of Independent Professionals and Self-Employed. Really excited to be here talking all about the self-employed, what the journey they've come on in the past 10, 20 years and where we are today. Quick word on who we are as well. IPSE, we're the UK's only not-for-profit membership organisation dedicated exclusively to the self-employed. We were founded coming up to 25 years ago now, and all of the sorts of benefits that we offer to our members include things like access to tax and legal helplines, co-working spaces for our co-working provider and access to all kinds of templates that you'll need to go about your day in business, whether it's invoice templates, contracts, contract reviews, all sorts of stuff. Also loads of opportunities to network, learn, connect with other self-employed people and the organisation. Events all throughout the year, including our National Freelancers Day later in the summer and our Freelancer Awards towards the end of the year in November. And finally, we are a campaign organisation for the self-employed. We are experts on the policy issues affecting the self-employed, and we regularly speak to government MPs and others about all of this sort of stuff. So the first point, self-employment is on the rise again for the first time since the pandemic. Before the pandemic, we had about 10 years of quarterly growth every single quarter certainly between 2012 all the way up to 2019. We had constant growth. The sector was at a peak of around 5 million people, and then the pandemic struck, and that prompted hundreds of thousands to leave the sector in the first year, and it declined by something between 600 to 800,000 people. So it set back the sector by quite a few years. And then once we hit that sort of lower leveling out, we saw a bit of stagnation where the population was trying to increase, but it just wasn't quite getting there. There just wasn't quite enough momentum there to get it back up again. But what we did see last year is the first return to year-on-year growth in the self-employed headcount, and there are now about 100,000 more self-employed people than there were in the previous year. And where we are now is that there are more than 3 million households where a primary or secondary earner is self-employed. And this is really important because it means that actually that 2010s surge we had in self-employment wasn't a one-off. Really, the UK does have quite a strong preference for self-employment. It's something that a lot of people want to do, and it has traditionally been seen as maybe a little bit too difficult to deal with in the financial services sector, and we've seen that in some of the research that we've done on mortgages and pensions. It's just not quite the same level of access, certainly not level of ease of access. But if more and more people are going to be working in this way, and that is the way we're headed, then making sure that they've got equal priority in financial services is absolutely essential, really, especially as more and more people take on part-time self-employment as well. Is another trend we're seeing, supplementing the main employed income. So who are the self-employed? Well, there are 4.2 million solo self-employed, so that's specifically those who are just working by themselves without any employees. And this is up by about 100,000 the previous year, as I said. Self-employment covers quite a broad range of terms: sole traders, partnerships, people that run limited companies on their own. They might call themselves contractors sometimes. The term freelancer as well has a specific meaning for our purposes. Freelancer usually refers for us to those in the top 3 occupational skilled categories, the most skilled workers. That's people working as like interim managers or designers or engineers, scientists, those kinds of jobs. The most popular roles of all are construction, which is no surprise, road transport, and also the creative sector are home to some of the most self-employed people overall. But what we are seeing is that the age profile of the self-employed continues to increase. So last year, the average age of self-employed was 48, it's now 49, so it's getting slightly older, and that's because almost half of them are actually aged over 50. But what we are seeing most interestingly is a big increase in the skills profile of the self-employed sector. Like I said, I just mentioned freelancers who are in those top 3 categories. We saw an 11% jump in the number of freelancers who are, so effectively the self-employed sector is now half freelance. And in particular, we saw a big surge in over 50s entering skilled self-employed roles, highly skilled self-employed roles, which possibly speaks to a bit of a shift in people's attitudes to their careers and their works after the pandemic. Perhaps some people, unfortunately, were made redundant or lost their jobs, or simply decided that they just didn't want to do what they were doing. And we're seeing that more and more older people are entering self-employment than before, which is really interesting. So in terms of the key financial sort of trends for this sector this year, I think if we think about the fact that the economy, despite the fact that inflation is going down, we do know that technically the economy entered in recession last year. And the way that freelancers might see that start to affect them this year is that more and more of their clients might start increasing the payment terms, so the length of time in which that they agree to pay invoices. I've seen lots of examples of this where people are being told, we used to do 60 days, which is already too long in my view, and moving it up to 80, 90, sometimes even 100 days. And that's a separate issue to being paid late, which is, where you have an agreed invoice date and they simply don't make that. And these are all ways actually that clients may decide to try and optimize their cash flow. And that does unfortunately mean that the freelancer at the end of the chain is one that loses out. So even though they've done the work, it doesn't necessarily mean the money's coming in. And that's an increasing risk when economic times are a bit more challenging. There's also similarly the risk of client failure, so doing the work and then they go bust before they can pay you for the similar sort of reasons. And these the kinds of concerns that prompt freelancers, especially in times like these, to favour having more financial liquidity. So they want to have more in cash that's easy to access to respond to any short-term financial shocks. But this does, of course, come at the expense of any kind of long-term saving. It's not to say that they don't save, but they save at lower rates than employee counterparts. And this obviously will affect home buying as well. And the lifetime ISA similarly is almost a perfect product as a savings vehicle for self-employed basic rate taxpayers. But obviously there's the withdrawal charge and the fee on top of that, the penalty on top of that, which just makes it that little bit more difficult for the self-employed to consider using. And that's actually why IPSE, along with the financial provider Hargreaves Lansdown, have actually called for this to be removed, the penalty element to be removed, so that it is fiscally neutral for the self-employed and just make it a little bit more palatable for them to put their money away in a long-term savings product for them to save up for their first home. In terms of the budgets and what we're seeing in this financial year, well, we've seen that the national insurance, Class 4 national insurance, has been cut to 6%. It was at 9% in the previous tax year, so that's a fairly significant cut. Similarly, Class 2 national insurance has been abolished for those earning over a certain amount. At least if you're earning quite low amounts in self-employment, you will still need to pay that. But this is more of a simplification than a genuine saving, because it amounts really to only a couple of hundred a year, and it won't be making quite the same difference as the cut to national insurance. So that's the considerations as far as sole traders are concerned. And for those who are working through a limited company, there is, of course, a diminishing attraction of dividends, which have been the preferred way to receive income. If you're working through a company, you'll take salary and dividends. But we have seen that the dividend allowance since 2017 has been cut, or perhaps even longer than that, has been cut by about 90% and is now just £500 when it used to be about £5,000 not too long ago. So we're seeing the benefits of dividends being eroded, and that can change the way that the self-employed or limited company directors will be taking their income out of their companies. And overall, the consensus is that despite the cuts to NI and the reduction in inflation, overall the self-employed are still likely to be slightly worse off as a result of fiscal drag and personal allowance thresholds still being frozen and no change to the rate of income tax. So overall, it's a bit of a mixed picture for the self-employed, and the budget hasn't really, in our view, nudged them in the right direction just yet. Similarly, with IR35, we're seeing quite a stagnant picture in terms of how it's affecting the self-employed. Just a quick recap on what we mean by IR35. It's actually tax legislation designed to prevent something that's called disguised employment. And this applies only to people who are contractors working for a limited company for another organisation. And this actually IR35 actually comes in two parts. There's the overarching sort of IR35 rules, which have been in place for over 20 years now. And there's also the off-payroll working rules, which came in the public sector in 2017 and the private sector in 2020-21. And the IR35 rules say that if you work like an employee, then you should be taxed like an employee. So even if you're working for a company, the HMRC believe that the way that you're working is actually like you're an employee of your client, then employment taxes will be due on that arrangement. And so that means you can't actually take dividend income in the same way. You'd still be paying tax like an employee. And the off-payroll rules, what they do is they actually say, well, for public sector organisations and for medium and large-sized businesses, the onus is on them to decide whether or not this is the engagement is one of employment or not. And so this has caused a lot of problems because the clients are struggling really to make those decisions. They often think it's quite difficult, or they're nervous of getting it wrong and potentially facing a penalty from HMRC. And so we're seeing a lot more what's known inside IR35 roles, which is to say that they are effectively employed. And this does ultimately mean that the contractor takes home less money than they would if they're working outside. So as I said, outside they're paid gross through their company, and they can take a mixture of salary and dividends. if they're required to work inside IR35, typically be asked to work for an umbrella company, and they will deduct things like the employment taxes, and they will effectively be the employee of the umbrella company. But this isn't like a normal employment as you and I would know it. It's one that's quite transigent. They might be asked to move between different umbrellas depending on which client or agency they're with. And so this can give the impression of instability. It might look like they're jumping between employers when actually they're a contractor that's working on different assignments over multiple years. And the other thing to know about IR35 is it's not a static thing. It's not that a contractor is an inside IR35 contractor or they're outside on a permanent basis. It's all to do with each individual engagement. So it can be the case that a contractor will be working on inside IR35 on one engagement and simultaneously doing a contract for another client through their own company, receiving two different forms of income, one being employment style income and the other being dividend and company income. And the final point to note as well, actually, for umbrella workers is it's quite common for those contractors who have worked all their lives through their company and suddenly who are now asked to work for an umbrella company. It's quite common for them to boost the salary sacrifice into their pensions because they don't like to be taxed like an employee. You know, as far as I'm concerned, they're self-employed. They've not gone into self-employment to be taxed like an employee, and so you might see that salaries are therefore slightly lower as a result, even though pension contributions are higher. So it's just another thing to bear in mind when looking at the income of a self-employed person when they're affected by IR35. In terms of what we're seeing and how widespread the impacts of this are, this is just some of the latest data that we've just released as part of our IR35 Spotlight report, and this is an annual report. We release it every year around this sort of time, change the tax year, and this is the second year in a row that we've done it now. And the key findings are, at the moment, 1 in 10 contractors say that they're not currently working, and the reason for this is, well, they blame IR35, the impact of IR35, as a result of as the cause of why they're not currently working. And over half of them have actually walked away from contract offers in the past year, purely on the basis that the client deemed them to be inside IR35. So we are seeing, as a result, maybe slightly bigger gaps between assignments and between contracts, which might affect annual turnover for those who are determined to only work on an outside IR35 basis. And in terms of what we're seeing for the year ahead, both contractors, they intend to only work outside of IR35 and sort of ignoring assignments that aren't. So there might be more periods on the bench for them if they can't quite find what they're looking for. But however, there are a quarter who say that they will work regardless of the IR35 status of the engagement. So they still will be receiving some kind of income. As I say, there are those considerations for those who work in umbrellas and the way that can impact income and affordability as well. So that was a very, very quick run through of the self-employed landscape and where we are today. For more information about the self-employed, please encourage you to subscribe to our newsletter. It contains all kinds of insight, news and commentary, as well as access to lots more information, including some of our latest research and opportunities to connect and network with the self-employed as well. If you scan that QR code, it will take you to our website where you'll be able to register for our newsletter. And yeah, thank you very much for listening, and back to you, Eloise.